Today, through a very interesting story, I'm going to explain the power of compounding to you. This is a story about three friends, and their journey will truly make you realize how significant wealth can be built through systematic investment plans. There are three friends. The first friend's name is Rahul. The second friend's name is Yash. And the third friend's name is Himanshu. These three friends are together in college and they decide to start a part-time job. Through this part-time job, they begin to earn 15,000 rupees every month. They are well aware that after graduating from college, they will surely secure a job earning at least 50,000 rupees per month. But they think that the money we are earning, we are not going to waste it. We will invest this money. Now, they watch a video on the internet that explains how a significant amount of wealth can be created through SEPs. So all three of them start SEPs, each for just 5,000 rupees a month, and they manage their expenses with the remaining 10,000. Now, what kind of impact will this 5,000 rupee a month SEP, which they've started, actually have? You need to understand this in detail today. The very first friend among them is Rahul. He starts a monthly SEP of 5,000 rupees and he tells his two friends, Yash and Himanshu, you guys should also start putting in 5,000 rupees every month, and let's all three of us choose just one fund. We are going to invest our money into the very same fund. Now take a look. The fund itself is identical. The amount for all three is also the same, but a truly significant difference is about to emerge in their lives. We will now proceed to understand this right here. So a monthly SEP of 5,000 rupees is now commencing. In the first month, Rahul asks both of them, Yash and Himanshu, hey guys, has the SAP installment been deducted from your accounts? They reply, yes, absolutely, we have invested 5,000 rupees. A month passes, then 2, then 3. And just like that, 6 months go by. After 6 months, the three friends meet and discuss that their SIPs are running continuously. No problem at all. But now, what happens next? We need to understand that. So they continue doing this. An entire year passed. During the first year, all three of them made equal SAP contributions. Now, what happens when the second year rolls around? Their friend Yash then states, brother, I've been consistently doing CPs for 2 whole years and I'm simply not receiving any notable returns. These individuals were investing in flexi-cap funds. Now, what exactly is a flexi-cap fund? It's a type of fund where your investment is allocated across large cap, mid cap, and small cap stocks. However, Yash somehow learns that small cap funds tend to generate significantly higher returns. Convinced by this, Yash decides to discontinue his SIP in the flexi-cap fund and promptly initiates a new SIP in a small cap fund. So, a small cap fund typically invests its capital in companies that are relatively small in size but hold significant potential for substantial future growth. However, Yash is unaware that during the third year, the market often experiences a significant decline, falling by approximately 25%. However, one crucial point is that if the market declines by 25%, small cap funds tend to drop by as much as 50%. Yes, while they offer higher returns when the market performs well, a significant loss occurs for Yash when the market falls, because he decided to change the fund. Now the portfolios of both other friends, Rahul and Himanshu, take a hit of almost 25%, but Yash suffers a 50% loss. Now let's understand on screen that if you invested for 5 years, and let's assume market returns are currently zero. No zero returns. So, what is your investment after 5 years? Your investment is 3 lakh, but now on that 3 lakh rupees, Yash has already taken a 50% hit. That means he's already lost 1.5 lakh. Now with such a huge loss, Yash decides, I'm stopping my SIP for now. When the market starts moving again, I'll start my SIPs. So they end up withdrawing their remaining 1.5 lakh rupees. Now Himanshu also gets frightened seeing that the market is currently falling. So what exactly does Himanshu say then? Alright, for the time being, the money I've invested over these past 3 years, my 3 lakh rupees that were put in, I haven't received any returns on that. I have certainly incurred a significant loss. But just how much has it been? There has been a 25% loss. So with a 25% loss, he withdraws 225,000 rupees. He has booked a 75,000 rupee loss. But now there's a friend whom I would call sensible, Rahul. He says, it's no big deal. I had invested 3 lakh rupees. The market has fallen. My fund is down to 225,000, but I will not stop my SIPs. I will let my SIP continue. Rahul allows his SIP to continue. However, in the upcoming 4 years, the market is projected to show an average return of 15% and the total duration reaches 7 years. By the end of 7 years, what was initially 3 lakh rupees in investment now totals 4 lakh 20,000.
But what is the overall total now?
Rahul's actual portfolio, it eventually grew. It became more than 7 lakh rupees, specifically 7.44 lakh rupees. So now Rahul has 7.44 lakh. Yash, on the other hand, had already withdrawn his money, so he was left with only 1.5 lakh. In fact, he ended up losing 1.5 lakh. And Himanshu had also withdrawn his money. But what exactly did Himanshu do? In the middle, when the market started moving again, he even invested his money. So he invested after it started moving. So he missed out on the returns. Ultimately, what eventually happens, after 7 long years, the 3 friends meet up once more. Now, all 3 of them have secured good jobs. They are earning 50,000 rupees every month, but even then, all 3 are still continuing with an SAP of just 5,000 rupees. Only a 5,000 rupee SIP is currently active. Yash now decides to restart his SIP. Himanshu too begins his SIP once more, while Rahul had been consistently continuing his SIP. He hadn't paused his SIP at all. Now what happens next? That's something we need to understand. It took 7 years to reach 744,000, but in just the next 3 years, in only 3 years, I'm going to make it 10. You'll see this investment value has almost reached 1400,000 rupees. So the name of this rule is 7th. The 3-2-2 rule. It took 7 long years to build up a substantial corpus, but then it only took 3 more years for that very same corpus to almost double in size. If the market is giving good returns, then in just the next 2 years, within a total of 12 years, Rahul's money will grow to over 20 lakh rupees. Just compare 7 lakh to over 20 lakh. His money has almost tripled. Now here we will look at this purple color. This represents the investment amount. This indicates how much capital was invested. And this green section here, these are the returns. So let's observe the initial years, 1, 2, 3, 4, 5, 6, 7. For the first 7 years, your investment's value was higher, but the returns were quite low. But from the 8th year, the magic of SIP truly begins to unfold. The returns begin to grow significantly, and gradually the green line starts to overtake the purple one. And this is precisely why, over the course of those 12 years, Rahul manages to achieve an impressive return of approximately 180%. This is the magic of an SIP. And if Rahul allows this to continue, let's say for approximately the next 25 years, investing just 5,000 rupees per month, then he will have more than 1.5 crore rupees. I am taking this 12-year example because a young man began when he was just 18, and today he has reached the age of 30. So at the age of 30, Rahul now contemplates launching his own business venture, and he also speaks with Yash and Himanshu about it. However, Yash and Himanshu unfortunately have no money at all. Rahul has managed to accumulate more than 2 million rupees, and he achieved this remarkable feat with a monthly SIP of just 5,000 rupees. And if the SIP amount had been larger, the total money would have grown even more significantly. Now, if you people, just like Yash, decide to stop your SIPs when the market starts to fall, or choose to pull your money out, then your financial loss is absolutely guaranteed. You are bound to suffer a significant loss. And if you, like Himanshu, think to yourself, alright, the market has dropped, I'll only put my money in once it starts to climb again, then you will completely miss out on all potential returns. What you need to do is be intelligent, just like Rahul. In the market, you must at least follow the 7-3-2 rule. आपको सक्सा बन सकते हैं. If you can think beyond 7 years, you can begin your SIP today. If you require assistance from our team to initiate your SIP, you can call the number displayed on your screen to obtain all the necessary information. You will also find the Google form link below the Demat account link. You can complete that form. If you prefer a one-on-one consultation, you can certainly start your SIP on your own. For that, you will simply need a Demat account. You'll find the link for a free Demat account in the description and the pinned comment. You can open your Demat account, do SIPs in the stock market, buy stocks, buy ETFs. In fact, you can also do trading, and you can even earn 500 rupees per referral. The Demat account link is in the description and pinned comment. Start your SIP today, and you'll surely witness the magic of compounding in the long term. Share this video with maximum people. Are you going to start an SIP? And if so, for how much? Let us know in the comments. Will you invest in the stock market or not? And share this video, subscribe to this channel, click the bell icon, go self-made, and Jai Hind.